Welcome to TheoTrade. This is Don Kaufman. It's October 10th, 2025. There's 40 minutes to go to the cash close here on this Friday afternoon. S&Ps, they're getting rocked down some 2%. But stop right there. I'm saying, they're getting rocked, they're down 2%. One thing right off the bat, it's not even a statistically significant move till you hit 3%. Nevertheless, it feels like a fairly rough ride to the downside. The NASDAQ is down almost 3%. Look, bottom line over here, strap in. Markets, they just got real in a hurry. All right, let's start to break down some of the action we're seeing on the screen and really some important points to be made right off the bat. And the first one is volatility got serious, and it got serious in a hurry. And I'm actually going to show you in a couple of different volatility kind of constructs why I'm saying that vol got so serious. And it's literally at this point, this is not in a tweet's hand anymore. This is all about volatility. All right, let's start to break it down. S&Ps right now are down 144 handles. One of the most important things I could bring up on the screen right here, right now, we're flirting with breaking off the lower edge of the expected move in the SPX. So we started the day obviously considerably higher. Look, everybody's pointing to, a tweet came out and there's China this and China that. The bottom line is market's been sitting on a powder keg of risk for a significant period of time. We've been mentioning that nonstop. You knew that we were going to have a volatility kind of burst sooner or later. This was just the match that, kind of sparked it. This is what I kind of call a chocolate-covered hand grenade thrown at the marketplace. So, all right, we're cruising along. We're trading, 67.60. Next thing you know, boom, we're down. What did we do? We fell directly on the lower edge of the expected move. And that crap is just spot on. And the remainder of the day thus far has just been flirting with the edge of the expected move. Now, okay, this is important. We're sitting down here at 6,600. And we're starting to push off the lower edge of this expected move. And that's where, there's 40 minutes left of the cash close. And I got to tell you something. I wanted to record during this because I see us right now. We're starting to push a little bit lower. And what that implies is trade is going to have to come in. And this is actually going to be dealers. Okay, dealer gamma is going to have to come in. They're going to have to buy volatility and sell S&Ps, which basically implies, like, if you look at volatility, stop looking at the VIX. Seriously, stop looking at the VIX. The VIX is not even a tangible tradable product. Yeah, you can trade VIX options. Those VIX options are based on these volatility futures. But these volatility futures, they're up there. Volatility got serious. It's raging. It's pissed off at this point. Vol is up full 3 points, good for 17% in the near term. And it feels like volatility is about to actually break out, possibly above the 21 level. And that would actually be a sign of prolonged, if you will, risk. Beyond, if you will, and extend beyond today. This is not right now. If you look at the volatility structure right now, this is not a flash in the pan, and I'm going to show you why here momentarily. So the SPX is actually down. We're well under, okay, and we look like we're going to push off. And it's a kind of trading session where there's 40 minutes left, and I'm like, look at the clock, look at the S&Ps, look at volatility, look at the clock, look at the S&Ps, and I'm literally like looking at all three of those. I'm like, holy crap, there's a lot of time left on this clock. By the way, people always worry about, what about circuit breakers? You ain't even close there, cowboy. Circuit breakers, nowhere near a circuit breaker. Like, that's not even in the realm of possibilities over here. The only realm of possibilities, the NASDAQ could be down 3%. The S&Ps could be easily off another 0.5% in this trading session. As I said, I'm like, oh, they're getting rocked. 3% though is statistically significant, okay? And you're only at 2.2%. Give it time, people. So volatility got serious. The volatility futures are amped right now, very close to the highs of the session. And that says something. Now, volatility really exploded today, much more than I would have anticipated for this kind of a move in the S&Ps. It's a clear and decisive indication. When I say, though, that volatility really took off, yeah, I'm showing you the 12-day volatility futures. But what really changed, okay, is the volatility structure. And I'm actually going to freeze the screen for a second just to show you this, because we're looking at 40-day volatility. okay, versus, for instance, 68 and 103-day volatility. This is no vol versus decent Jan vol. And what you're very close to seeing, okay, which is shocking because one day, people, one day does not make, okay, for Volmageddon typically, but in one trading session, you've actually almost gotten to the point of where we go to what's termed backwardation. Backwardation. And what is backwardation? That's when this, okay, November volatility starts to eclipse the December volatility. So by the end of the day, if you had NOV trading at 22 and you had DEES trading, for instance, at 2170, okay, that would actually be construed as backwardation. We're crazy enough within 10 cents of actually seeing a backwardation, okay, in the NOV DEES. And that's the one you would look at right now is NOV DEES for backwardation, which is kind of wild because all of a sudden you start smelling risk and they're like, there's a fire, you know, it's not even but a 2% move that can shove us into backwardation. You got to realize how fragile things really are. And that's the point where I'm saying like the volatility got serious and this is not easily undone. Once you actually hit that level and you start to go into backwardation, okay, I'm sorry, but it's on at that point. And when I say it is on, I mean the volatility is on. Next point to be taken over here. As I said, several of our volatility constructs are screaming right now. You got the VVIX. This is the volatility index. If anybody, okay, if anybody screams to me, I didn't see it coming, volatility has been elevating. I've been pointing this out, okay? And I pointed out even on the Wednesday, video, volatility has been very, very funky lately. It didn't necessarily see this tweet. Like that's ridiculous to say. Nobody sees the future over here. That future wasn't, any certainty until this morning. But volatility could definitely feel it coming up and all of a sudden it takes off to the upside. This VVIX, okay, is a great indication of prolonged volatility. That sucker's all the way at 113 and very close to highs of the trading session. So again, all of your volatility kind of constructs, as I was saying, are rocking right now to the upside. Obviously, like VIX is taken off to the upside as well, but that VVIX, which is the volatility of the VIX, is what matters more than to me than the VIX level, at least at a point in time like this. And if you look at the VIX, it's up 30%. So all of a sudden, like, what do you say? You move down 2% in the market, okay, but volatility is up 30%. Pretty crazy, right? There's 1/3 more risk in the world than there was like 4 hours ago. It sounds stupid when you say it. It literally sounds absolutely stupid, okay? But at the exact same time, I'm telling you, there's 1/3 more risk. There's 30% more risk than there was, okay, 4 hours ago. As ridiculous as that sounds, that's why I said strap in. It just got real, okay? All right, onward from there. Again, vol got serious. The next point, look, I know people are going to want to buy the dip, and we're actually going to kind of mix the next 2 points. We only just scrape the surface, just a little scrape in the paint of tech. Okay, I want to remind each and every one of you to begin with here that NVIDIA, it hit its all-time high, okay, a couple hours ago. Like literally, when I say a couple hours ago, I was talking about, 4 hours ago. Yeah, 4 hours ago it was at an all-time high. Oh, I apologize, it's 4.5 hours ago. Things at an all-time high. Now where is it? Okay, everybody's like, crapping themselves and running for it. It's down 3%. You're not even scraping the surface. You haven't even skinned your knee in here. And I want you to realize that. All right, a little bit more damage in Meta. Where things are starting to get more interesting, though, is like Apple. Okay, Apple's taking a hit. Apple is now officially massively unchanged on the year. Along with Amazon, you want to see something really interesting? Okay, Amazon's actually down on the year. You wouldn't have expected that, given the fact that this is like one of the largest, tech rallies in history. Apparently, Apple and Amazon are no longer tech; they're just crap that sells people stuff. Again, back to NVIDIA, it's up 35%. But when I say we haven't even scraped the surface, literally, okay, haven't really scraped the surface yet of damage inflicted, okay, into a number of these key products. Now, Broadcom, it's taken some heat. Things still up though, 40%. Be mindful of this, okay? Wrapped into that, I do want to mention something, and that is, okay, this is going to put some fear into people, but inevitably, people are still going to come out and buy the dip. Okay, I'm just going to be very clear, very concise in saying this. You buy the dip, okay, use spreads. Don't buy a call, okay? Sheer stupidity at this point. Am I being very literal, kind of mean about that? You're damn right I am. You buy a call, you die. Why? The volatility is way too high. Volatility just increased by 30%. You want to go out and buy a call? Okay, what's the first thing that's going to happen when some of these stocks do rally back? They're going to vol crush the living crap out of you. That means volatility is going to go down. You know what the calls that you're buying are? They're extrinsic value. They're basically, you're buying volatility. When you buy a call, you're really buying volatility, especially an out of the money call. It's going to get crushed. Spread your risk. Number 2 on that front. Use spreads for everything. When I'm saying using spreads, if you're going to get bullish, okay, and I'm not here to tell you I'm not getting bullish. I think this is going to be prolonged volatility, but I am going to show you the right way to do it because nothing upsets me more than watching people just get vol crushed. So this is what a spread would look like by the 190, 195. This is 7 days out. If you think a rally is coming on Monday, but I don't. Nevertheless, I am showing you a bullish trade. At the very least, this protects you. The max risk is $1.65, max upside in here, whatever, okay, 335, done. Protects you from volatility crush. You know the other thing that people are going to do that's going to be absolutely ludicrous? They're going to go out there and actually buy the stock, okay? Are you out of your mind? Why in the hell would you do that when you could just go out there and buy a spread? You go, but it's not making enough. Good, do more, okay? Go crazy there, cowboy, but don't dare buy a call in this crap because you're going to get volatility. You're going to get the absolute crap kicked out of you in a vol crush if you do it. So that is going to be incredibly taboo. I'm telling you that this marketplace, the way that we're eventually going to descend in the marketplace, and we will eventually descend, I'm not going to sit here and say the bubble is popped. I'm not ready for that kind of crap. The bubble isn't going to pop like you think it is. It's not going to happen overnight. 2% move is crap. Right? Bubble's going to pop. It's going to lure more people in. And then it's going to rally. And it's going to lure more people in. And it's going to rally. And it's going to lure more people in. And then it descends and it lures more people in. This is no longer going to be, okay, an easy ride out. This is going to be hell in a handbasket to be able to get out of this. That's why if you are going to get bullish, you are going to dip by, use spreads to find the risk. Keep your position intact. All right, bond markets. Got to talk about them for a moment. We did see considerable movement into the bonds, but here's an interesting twist to that. The bond market was already up quite considerably before the Trump tweet, post, whatever the hell you want to call it. I have no idea. Okay. As I said to you, like the markets, they were already aggravated a little bit. Like the S&Ps weren't selling off, but the markets already were, volatility was already higher. So the bonds were actually trading 117 and 12 ticks. Okay. They're not even up a point. So the bonds were not good duck and cover. But there's a really weird kind of facet of this. The bond market's actually going to be closed on Monday because it's Columbus Day. Am I allowed to say Columbus Day? Indigenous Peoples Day. So I have to be politically correct. So the bonds are going to be actually closed on Monday. Without the bonds open, okay, ruh-roh, raggy, where are you going to go? The electronic bond market's going to be open, but there's not going to be a lot of liquidity in it. They're going to reach for volatility, or they're going to sell S&Ps, okay? Ooh, it's a really weird, scary thing that the bond market is technically closed on Monday, okay, following obviously a pretty critical sell-off inside of the S&Ps. So think about it, because there's not a lot of places to go. I know what people are thinking. They're like, we're all going to run, okay? We're going to hold hands, and we're going to buy Bitcoin, okay? Except Bitcoin sucks. Yeah, you want to know something about Bitcoin? I'm not ripping on you if you're into crypto. What I want you to understand about crypto, specifically Bitcoin, the correlation, I've been screaming about this nonstop. Okay, I literally did a TV spot the other day specifically about this. Okay, the correlation between Bitcoin and the S&Ps, okay, is like 1 for 1 now. I just mean this. Like, look, if the S&Ps are going to sell off, crypto is going to get hit. Crypto gets hit, the S&Ps are going to get hit. Crypto is just like, and Bitcoin is just like a high beta stock these days. Okay, it's an extension of the marketplace. Once you start listing Bitcoin on a platform like Thinkorswim or Tasty or Robinhood, okay, or any of the other trading applications out there, once you start listing it, okay, alongside other securities, it just becomes one of them. Okay, you're just one of the gang now, Bitcoin, and you thought you were special. Bitcoin, okay, I have been warning about this for a while. Coming down to 110,000. That's going to be wicked because I'm going to tell you right now, okay, you're not that far from it. This did have a statistically significant move today, over 4% move to the downside. crypto getting absolutely rocked. I have something interesting to show you in BITO. BITO is an ETF, okay? It's an ETF, though, based on Bitcoin futures. It actually fully cracked its expected move today. It was flat on the week, okay? Got absolutely annihilated. What's going to be very interesting is to see, okay, crypto over the weekend. I suggest to you there could be wicked moves over the weekend in crypto. Wicked moves. Why? Lower liquidity, people actually realizing the proverbial beep could hit the fan on Monday. This is not a good position to be in. Not a good position to be in. You're long right now in Bitcoin. Get nervous over the weekend. You better watch that crap. I don't usually say stuff like that, okay? But this is interesting because, again, bond market's closed. Bond market's closed. There's going to be panic at the disco if there's any more news over the weekend, if there's any more retaliation from China and or the US, crap's going to hit the fan. Crypto correlation, it's there, meaning that we're trading with the rest of the market. Speaking of correlation, look at this. We're almost fully correlated to the downside, but there's still 17 items that you could sell on this screen, one of them which is Walmart, okay? There's not a lot of places to run to, not a lot of places to hide today, okay? Almost every major, ETF and is down across the board. Maybe XLP, which is, akin to like Walmart, actually has a little bit of a bid under it. Even the XLU, I took a bearish position in here today. I'm still working a couple of trades, but took a bearish position in XLU today because that was the only thing that didn't get absolutely clobbered. Figured it would throughout the course of the day. Speaking of getting clobbered, there it is, people. We're now a 3% loss inside of the NASDAQ. It's on, okay? Look at volatility. Look at volatility just since the beginning of the session. Volatility was here. I told you it was going to rip to 21. We have now ripped to 21. Why? Because we broke away from the lower edge of the expected move. More on that in just a moment. This week, okay, we're kind of firing on all cylinders. This volatility today definitely helped us out. In BABA, okay, in BABA, I actually closed a out of the money spread in here for an 84% gain. In XLE, okay, XLE, this is just today, by the way. In XLE, closed this for a 55% gain. It was an in-out spread, okay? And the big one that we hit today, we actually hit in the SPX, okay? I hit a expected move butterfly. That is, I was targeting 66.20. He shoots, he scores! A 345% gain. By the way, I actually closed half of my position for 345%, closed the other half of the position for over a 450% gain. So it is winner, winner, chicken dinner inside of a couple of trades. All we needed, okay, is one little volatility spike. This wasn't about, okay, being bullish or bearish. It's about volatility erupting, and that's exactly what you're seeing on the screen right now. Speaking of volatility erupting, as I said to you, it's getting serious out there. Volatility has gone parabolic. We're going back to the volatility futures for just a moment. I started the conversation here. You know why? Okay, I'm back to it. Ladies and gentlemen, volatility right now is going into backwardation. Okay, we are right now a flat vol skew. We're 21.38. Okay, at 21, basically 40. The vol skew is completely flattened out to within 3 or 4 cents of actually going into backwardation. There's a high probability of backwardation right now, which would be indicative of the volatility is here to stay. Okay, it is a very, very hostile marketplace right now. When we started this, we're talking about a 2.2% loss. We're now down almost 2.5%. Yeah, well, we're going to find out what statistically significant means. Again, as I said, markets, it got real out there. Let's cruise over to the SPX, the mother of all products. In the mother of all products, actually go to the spiders for a second. Starting to see that on the chart. Okay, throw that into again a weekly chart. Check this out. Okay, it's a move. It's not the move, but it's a move. It's definitely a start. And again, this is a point in time where, as I said to you, I keep thinking to myself, I'm like, wow, still like 22 minutes left inside of the trading day, and this is getting real. Okay, I mean they're selling into the close. By the way, there's no circuit breakers in the last 35 minutes of any trading session. You could sell off into an oblivion. Nothing can stop it in that time frame. Just letting you guys know. But in this case, it's not even the S&Ps I'd be concerned about. I'm serious. I think crypto, okay, you could have an absolute debacle in crypto the moment the S&Ps actually close, because people would get ahead. For me, like if I was caught in some crappy positions and there was some news that came out, If I was in crypto positions, I would actually short in crypto just to and get out of my crypto positions just to get ahead of the curve. As I was saying, last but definitely not least, in the SPX. So the SPX, okay, is a high probability of breaching the lower edge of the expected move. With that, okay, brings an onslaught of volatility for next week. This past week, we had a $94 expected move. What are we looking at for next week? Now, we are in no uncertain terms. We're not closed. We're not even close to close. We're looking right now at about $175 expected move. Now, can that change? Of course it can change, because the SPX isn't another 20 minutes. The SPX is 20 minutes plus an extra 15 after the close. So, okay, you could see expected move here. There's a possibility of even eclipsing $200 expected move, which doesn't sound like a lot, given the fact that the S&Ps are down 172 right now and facing, okay, almost a 3% hit. As I said, okay, keep your head in the game. I'm going to be with you guys every single step of the way, okay, from Monday before the cash open. Even if I need to, if the futures open up on Sunday night and crap's hitting the fan with futures on Sunday night, I will be here. I will stream live. I will do whatever it takes, okay? This is what we do, people. We are traders, and this is the kind of marketplace. This is where it's done. It's getting real out there. It's getting real in a hurry. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.